Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to this week's edition of the Tax Talk with AJ. The show brings you all the information that you need to know regarding taxes, corporate taxes and personal taxes, so that way you can be updated and you can start preparing filing a tax returns, whether you are owner of a business or your personal tax return. This information you will find it very valuable in our weekly show right here on ITV Gold. The show is brought to you by a very well-known accounting firm here in the state of New Jersey. That's SAI CPA services with multiple locations, and they can help you with any tax matter, any tax related audit matter. If you want to start a business, what kind of corporation that you need to set up, if you need a virtual CEO, CFO, or anything related to your business as well as your personal taxes, SAI CPA services and their on-hand trained and experienced CPAs will definitely guide you in the right direction to make sure that you file your taxes right. They can be reached at 908-380-6876 or visit their website saicpaservices.com. With that note, I'd like to welcome Mr. AJ Kumar of SAI CPA Services to the show. Sir, good to have you.
Thank you, Sanjeev. Thank you for the kind introduction.
Sure, very well. Now we are almost in the end of January and things are really heating up. W-2s going out, 1099s going out and everything, huh?
Absolutely. It's heating up. It's calm before the storm.
Yes.
So everybody should have their W-2s, 1099s by January 31st. Or people can download it from their website, the bank's website or the employer website. So a lot of people start showing up in the first week of February. This year, IRS has just started accepting the return by January 29th.
That's nice. So, that's a record.
Yep. So you will see a lot of hustle bustle in next 6 weeks.
January 29, which is really good. All right, so now let's move on. In this week's episode, Mr. AJ is going to share with us very valuable information about something really new that IRS or the US government, they have just come up with it, and it's really important. It's beneficial ownership information, right?
Absolutely, Sanjeevji. So taking a step back, let's start why the reporting started.
Correct.
So there were discussions since 10 years, 12 years, since September 11, 2011, a lot of these terrorist activities happens with a lot of money, lot of flow of money. That's when FBAR FATCA started. But FBAR FATCA was more information reporting, focusing on the individuals. This beneficial ownership information, BOI, is a new FinCEN requirement, financial crime enforcement network requirement for small businesses only.
Okay.
Not for the large business, not for the corporation, for the small businesses, mom and pop shops, small businesses. And the rule is that you have to report who really is the beneficial owner, who really owns this company, who gets the benefit from the profit and loss of this company at the end of the year. And the requirement is we want to track who is starting the business in this country, who is bringing the money in this country, who is investing into this country, so we can see the flow and we can track these activities. You have to remember, the country allows people to open a company in this country without being here in this country. Meaning anybody from any country can open a US-based company, a domestic company, without actually being here even for a day.
They can register a company.
They can register a company.
In the state of Delaware, Nevada,
any
those
state,
states, yes.
All the 50 states in this country allows you to open a company in US without actually being there, even for a single day.
Yes.
Even without having any visa.
Yep.
So it becomes difficult for the US government to track who is the real beneficiary. It gets worse. There are many states, Delaware, Montana, they do not require on their registration forms the beneficial information. They do not require who owns the company. They just say name of the company, address of the company, what will you be doing, and what type of taxes you will be paying.
Yes.
Basic information. There is no field, there is no requirement of reporting who actually owns the company.
So it has changed from this year now?
No, I'm sorry. Those states decide their own rules.
Oh, I see. Okay.
The Treasury came up with a rule, and a lot of times people start a company in Virgin Island. This Virgin Island company owns a company in Bermuda. This Bermuda company owns a company in Bahamas.
These are shell companies.
These are shell companies, and the Bahamas company owns another company in Delaware. So there is a chain,
Yes.
and you don't really know who actually owns these
Or
companies.
who benefits out of
Who
it.
is benefiting these companies. So the rule was created by Crime Enforcement Network, FinCEN, the same department that tracks the FBAR, FATCA 8938 filing, for small businesses to track who really owns these businesses.
When you say small businesses, what amount that you would set up as a small business?
Well, large corporations, public companies, banks, insurance companies, accountants.
Then why you say small companies? They are part of that, right?
I'm sorry, these companies are not required to file BOI.
But one of the main reasons to have these shell companies is that people want to park their millions of dollars in it. So why would they qualify under small companies?
Wonderful question. So a lot of large corporations, publicly listed companies, insurance companies, banks, accountants have to go through a lot of scrutiny to get the license.
Yes.
In order to list your company to public, you have to go through SEC, Security Exchange Commission. They will do lot of due diligence. So for the company that are exempt, those companies we already have the information on.
Okay.
In order for you to get an accounting license to practice as an accountant, you have to go through several different departments, including the fingerprinting, including a lot of things. So the government already knows who owns these companies, who is the beneficial owner of these companies.
Correct.
If you think about a publicly listed company, a large corporation, there could be millions of owners, millions of stockholders. So we can't really track those things. And in order for you to list the company, the real beneficial ownership is already reported to us.
Okay.
So those type of companies are exempt. What we are tracking right now is the bakeries, the grocery store, the laundromat, all these stores, all these mom and pop companies. You can open up these companies, are real estate companies, the shell companies, where you don't really, the investment companies.
Yes.
You don't really know who is the real beneficiary. The company is owned by another company that's
Right.
located in a Virgin Island. And this Virgin Island company is owned by somebody in a foreign country.
So now my question is, okay, since we understand that how the BOI form has to be filled out, when do they have to file it?
Great question. So any company that started this year, they have to file this BOI within 90 days.
Correct.
Any company that starts after January 1st, 2025, meaning next year, the reporting requirement will change to 30 days.
Okay.
Now we are giving 90 days because it's the first year. But any company that is started prior, just because there are millions of companies,
Yes.
the government is giving them 1 full year. If the company started prior to January 1st, 2024, meaning last year or prior, the government is giving them a year.
Okay.
So it's a new requirement. A lot of people are not aware of it. By the time the word goes out, it will be late.
Okay.
And you don't want to be charging them
All right,
$500.
so it's
a day.
effective as of 2024, January 1st, 2024, with the new companies setting up and everything else. But eventually they're going to catch up with the backlog, prior to
Absolutely.
2024,
That's the intent.
within a year, and slowly by slowly will catch up. I have one question.
Please.
Let's say if there's a company and had X number of owners or beneficiaries, so and so forth, and they have some kind of, tax structure such a way that there's a liability or there's too much tax to pay and everything, and when they realize that they are going to be reported as the beneficial of this small company, can they make changes in 2024, a beneficiary, who the beneficiary is going to be, and their name won't come up, their name won't appear, and they make the changes in the company structure?
They can, and it's allowed.
Okay.
The rule is once you change the ownership, within 30 days of changing this ownership, you have to report. But the downside is you have to report what's changing, meaning who was the owner and who is the new owner. Now you're disclosing that I was the prior owner and now you are going to be the next owner.
Yes.
But the change is, the rule is, it's not an annual filing. It's not a biannual filing. If you remember, the state of New Jersey requires annual report filing. The state of New York requires biannual filing. So there are a lot of states that have similar reporting requirement on their own. This is a federal requirement. This is a treasury requirement.
Right.
And it does not require you to be filing it every year.
Okay. All right. Quick question for a minute before we go into the break. How will companies know that they have to file this form, they have to give out this information, BOI?
Great question. And we know being the first year, this requirement has been discussed for 3 years.
Oh, okay.
People were expecting, just because it's too cumbersome to implement, how do you implement millions of companies, hundreds of millions of companies to report such a thing? That's why just for the first year, government has given 1 full year to report
Correct.
BOI information.
Yes.
So any company that is started prior to January 1st, 2024 will have till January 1st, 2025, 1 full year to report the BOI.
Okay. All right. Very interesting. BOI, beneficiary ownership information, in effect as of January 1st, 2024. If you're a business owner, small business owner, you really need to look into that. AJ just gave us guidelines on that, but we're going to have more information after this messages. Stay with us.
Did you know there are 14 countries in this world that do not have any income tax? For example, UAE, Bahrain, Kuwait, British Virgin Island, Bahamas. How much is the income tax, you ask? 0. No income tax. 14 countries. I thought it was interesting to know that there are countries where you don't have to pay any income tax.
So there are 14 countries, but you mentioned only 5 of them.
Well, they are the main 5 countries that you would
UAE,
know.
Bahrain, Kuwait, and then the Bahamas and the British Virgin Islands. Now, if there is no personal income tax, how do they survive?
Well, yes, absolutely, wonderful. So for Kuwait, Bahrain and UAE,
Yeah.
they are heavily dependent on their gas revenue,
Gulf
on their
countries,
oil
yes,
revenue.
oil revenue,
While on
right.
the other hand, if you look at the British Virgin Island or Bahamas type of countries, they have a lot of tourists. They are surviving on their tourist attraction. They
Correct.
don't have to take the income tax from their residents to survive as a country. So these are smaller countries or the countries where they have large source of income coming through somewhere else.
How can you be citizen for in one of these countries? So that way you
Absolutely.
don't have to
Each
pay
country
tax?
has a different requirement. I remember looking at Bahamas, you have to be living there, you have to own a property over there.
Correct.
In order to become the resident over there.
All right, that leads me to a question that maybe in the next episode or sometime soon, you should come up with the facts about in the USA, what are the states they have 0 income tax?
Absolutely, that's wonderful. There
That
are a lot
would
of
be great.
states.
Correct.
Florida does not have any.
Let's
personal-
let's leave it for the show. Let's leave it for the show, please.
Absolutely.
All right. So get that information. Anyway, let's move on to a BOI. Folks, in case if you have just joined us in today's tax talk, we're talking about BOI, which is in effect as of January 1st, 2024. Beneficiary ownership information. IRS. The government wants to know who owns the small business, who is the end beneficiary, and that must be reported. There are various ways to do it, which AJ discussed earlier. Now, where to file, where to report this?
Absolutely. This is not an IRS filing requirement, Sanjeevji. It goes to Treasury, the same department that accepts the FBAR and FATCA.
Okay.
So they have given their website, they have given a link. You go to their website. If you are a domestic business owner, you upload a copy of your driver's license over there that I own this much company, this is my percentage ownership, and this is my picture ID. If you do not have a US driver's license, you upload a copy of your passport showing clearly your picture, the address that you own this much percentage of company. The intent is to track who actually benefits out of this company.
Okay, so that is the one. Now, after finding out that how to report it, what is the next one? We talked about when to report it and whatnot, and now there are certain kind of companies, certain businesses are exempt from this BOI. Let's just quickly run down to the list to let our viewers know that what kind of businesses are exempt from this BOI
Absolutely.
requirement.
Great. At a high level, there are 23 different categories of businesses that are exempt. And if you take a huge step back, those categories represent either the financial industry, the tax exempt industry, or the large corporation / public companies. And the idea, the intent here is when you go for the tax exemption, 501c3 and whatnot, you have to go through a lot of hoops. You have to go through a lot of approval process. You don't really get the tax exemption just by applying online. So that means we already have the beneficial ownership information. We already have the trust information verified, updated in our system. Secondly, in a typical non-for-profit company, you wouldn't have the benefit. The people who own this or the trustees of the non-for-profit company are typically not the beneficial people, meaning they are not getting any benefit out of this tax-exempt organization. When it comes to the financial industry, including the insurance companies, including the banks, including the wealth planner, including the accountants, in order to get the license to serve in the financial industry, you have to go through a lot of tests, lot of approvals, lot of licenses. And as a part of those requirements, you even go for fingerprinting. So if you are an accountant, if you are a wealth planner, insurance company, in those situations, bank, you do not have to go through BOI filing requirement.
Okay, that's interesting.
If you are a public company, of course, in order to go through Security Exchange Commission, in order to list your company to public, you have to go through a lot of formalities. And having that beneficial ownership information reported for 1 million owner in a public company is not possible.
Okay.
So utility company, large corporations, public companies do not have to report the beneficial ownership information.
Okay, interesting. Now quickly, run down some of the things that are important related to this BOI. What is substantial control in BOI?
So if you own more than certain percentage, currently defined as 25%, then you are seen as substantially controlling the corporation, controlling the organization. So sometimes, let's say somebody else owns the company, your brother owns the company, your sister owns the company, your child owns the company, but you are the president, you are making the decisions over there. In that case, you still have the filing obligation, you still have the reporting obligation. So if you have substantial control on the company, in some cases, a company owns another company. In that case, how do you report the company information? Do you report the parent company's EIN? No, in that case, you look at the requirement as direct or indirect ownership. It's not just who directly owns the company. If a company owns another company, then you go to the parent company and see who is the beneficial owner, who is the ultimate beneficial owner.
Yeah.
And that's what you report for the child company, for the subsidiary.
Really interesting. All right. So besides that, what else do we need to know? We basically covered everything else. You have really given good information on this BOI. Is an updated BOI report required when the type of ownership interest a beneficial owner has in the reporting company changes?
Absolutely. So if there is any change in the beneficial ownership, as you rightly asked in the first segment, a lot of people you will see either closing the company in the near future, or changing the ownership.
Correct.
And it's a process. But any change in the BOI requires you to report the change within 30 days of that change, when the change happened.
Yeah, and then when they make a change, they also have to report it, that why there is a change and who was the owner, who was the beneficiary owner before the change, right?
Absolutely.
So
absolutely.
you really can't run away, from the fact.
A lot of people will be counting on the fact that millions of companies are reporting it. Being the first year, you still have an opportunity to clean it up. If there is any changes, you can still make it now, make it today. But try reporting it. A lot of people are not aware of it. A lot of people are, and please remember, the first filing requirement is within 90 days. Meaning, if you are starting a company, within 90 days you have to report it. Right now, all the accountants of the country are going through a busy tax season. Nobody has time to be talking about BOI. Everybody is talking about taxes. By the taxes finish, 15th April, a lot of people will already be out of that window, of the 90-day window.
Correct.
So you just have to make sure that if you are exposed, if you are a small business owner who is exposed to BOI, please talk to somebody, research yourself, and make sure you do the right thing.
Okay, and the last question, that if somebody owns more than 25% or more of the ownership, they all have to list down, that 25% for this person, 10% for this person?
Absolutely, and they have to report a picture ID. They have to include a picture ID, either a driver license, passport copy, or some sort of official government picture ID.
Okay, all right. Then is it really safe for me to say that if somebody out there who's watching our show and really wants to have this BOI information up to date and then want to go and report it, can they contact SAI CPA services?
Absolutely. We'll be happy to help. We'll be happy to guide you in the right direction. All the accountants of the world are working on it. There is a lot of fuss about it. A lot of people are talking about it. The timing is very important. Please remember, especially for the foreign companies, we expect the scrutiny to be higher. Just remember, the department that's tracking it is the same department that tracks FBAR and FATCA filing. FBAR, foreign bank account reporting, or FATCA, reporting the foreign assets, are tracked by Treasury, the same department that will be tracking the BOI. Even though BOI is implemented for the domestic companies as well, but the intent is to see who is the real owner. If you are a domestic owner, through Schedule K1, through your LLC, through your S Corp, we already know who you are. You are reporting it in your personal taxes. So the intent behind the rule is to track people who are trying to hide something, either through the shell companies or through the foreign companies. We see a lot of foreign company owners who do not report, who do not file any income taxes in this country.
Okay.
So this type of requirement will not only force them to file the taxes, will allow us to withhold proper taxes.
Something interesting to know, and this week we learned BOI beneficiary ownership information. As Mr. AJ said, that for any question or you want to get more details, contact SAI CPA services 908-380-6876 or visit saicpaservices.com. You'll see it on the screen. In the end, financial quote of the day.
So today's quote is, if you don't find a way to make money while you are not working, while you are sleeping, you will continue to work till you die. A lot of people in this country, Sanjeevji, they work 40 hours and whatever they earn, they spend. There is no saving. That's why people have to work until they die. They continue have to work. So you have to figure out a way to earn passive income while you are not actively working.
Okay, and that's a quote by Mr. Warren Buffett, one of the individuals that I admire most. With that note, I'd like to thank AJ for your time. Thank you so very much. Viewers, thank you for watching the show. Next week, we'll have more update for you, and this is the Tax Talk with AJ on ITV Gold. I am Sanjeev Pandya, wishing you all happy and the tax-free days ahead. So long.
Thank you.